So, what I want to share with you is this is going to be a collaborative conversation. I think the knowledge in this room, in addition to what I have to share, this is something that is going to be very interactive. So we're going to learn from each other. Dan, since you presented on this, I'm looking forward to hearing you contribute. But everyone has had some experience with this, things that have worked and hasn't worked. And so you'll see as we go through, I open this up for us to really learn from each other, not just me. So now the pressure is on all of us to be able to figure this out and crack this nut. As Ruvain had mentioned, I started my career as a CPA. I'm still licensed, but I'm inactive. I started in PricewaterhouseCoopers and Moss Adams, and then I taught Becker CPA Review for 10 years and did some teaching of accounting in college. So I think I have a unique perspective having a finance background, but as you'll see in my work that I do now, if I can get my slides to move for me, there we go. That I am heard many fractionals. I'm a fractional COO. And for those running on EOS, a fractional integrator, and I lead the industry. So I lead the industry. I go out and speak and advocate, and I also lead the community of fractional COO collectives and a dynamic duo community. So I'm really honored to have almost every single fractional COO in my community that exists. Since we're new to the world, you fractional CFOs out there have been doing this for a while, and we're just on your tail trying to catch up. I founded my own firm of fractional COOs. I do serve as a fractional COO. As an interim COO, I do coach and mentor other COOs as well as other team members. And what that really translates into, this is just a sampling of the different clients that I've worked with. You likely recognize none of the logos because the point is I focus on very small businesses and I do love to work in service-based businesses. Many of you all are really in a service-based business if you are providing services to clients. That's my specialty. And I give that information because it shows that I've been doing this with a lot of different executives, a lot of different entrepreneurs, and trying to get them to understand how important it is to look at their financials. So, as I mentioned, this is going to be a collaborative conversation. I want to hear from each of you. I want to understand from you as well what you've experienced, what you've seen works and doesn't work. We're going to talk about why there's challenges in having these conversations with other executives. Then we're going to look and focus on the financial statements, metrics and analysis, forecasting and modeling for decision making, and then Q&A. All right, let's start with challenges with other executives, and I put the non-financially trained. One of the things that I think I do bring to my clients is that I have transitioned out of the finance world into the operations world and how to run a business type of seat by being second in command. And so I do think I uniquely can speak both sides because I have to speak both sides. And then sitting in the COO seat, I am leading other executives and trying to get them to understand, like, that's a great idea, but do you realize what it's going to cost and the impact? And so I have these conversations all the time. But when I see, especially with entrepreneurs, but other executives as well, part of the challenge in having these conversations is that what I've noticed, I literally have watched them melt at the sight of math, like literally on Zoom, having them sink in their chair, like I can't see them. When I bring up, like, we should talk about the financials, like, let me see your financials type of thing, and the metrics. And I wish I was kidding, but I had at least two who I felt like splashed water on them and they were melting at the sight of math. But the other thing too is what they hear when you talk about financials is they hear accountants speak. And I'm not saying we're speaking like an accountant or a finance professional, but that's what they hear. So it sounds like a different language, so they just sort of tune it out. And the other challenges that we have is that what they need to know is they need to hear what's in it for them. They need to hear business speak. And it's always like with them, right? What's in it for me? How do I need to understand that? So that's part of the challenge is we have to do business speak, make sure we're not doing finance and accounting speak. The other thing too is that a lot of times what I'll see with other challenges with other executives is that their money mindset maybe has them avoid money issues. So this can be the way they were grown up, that money doesn't grow on trees. You have to work hard to earn money. Like some of these things that we hear can cause them to kind of trigger some internal judgment, if you will. If I don't want to look at my finances because, I don't want to have to deal with the fact that I might feel inadequate or I haven't worked hard enough or whatever. So just know that there's a lot of times things going on below the surface, or if you will, that are kind of unspoken fears around why they might not want to talk about money, especially when they're responsible for it. And then the other piece is that they do need to have responsibility and accountability, not just the finance people. And so that's part of the challenge, right? We can't, on the finance side, you can't do it without the marketing lead, without the tech lead, without the ops, the COO type of thing. They have to be responsible in collaboration with finance on the budget. So these are the challenges, right? We've got to have them hear it. We've got to work in partnership, and we're dealing with maybe some just resistance that may feel like they're resisting us, but I just want to have you say it's probably math or money that they are resisting. Anyone else have other experiences that cause the challenges that you see with having these kinds of conversations with other executives that you want to share? And again, this is meant to be a conversation or this will go too short. So please share if you've had experiences or want to enlighten us on some of the things that you've seen.
No, I'd be happy to jump in and start.
Yeah.
I started out as a financial analyst, so very, very spreadsheet, and I still do it to this day. I build my own projections and valuations. And what I learned over the years is understanding what their goals and objectives are, what they're trying, what's their end game, and then developing the numbers and crafting the numbers in a way that they can understand, taking complex issues and making them very, very simple, but always moving towards what their goals are and helping them understand the reality. Best case, worst case, most likely, and typically it falls somewhere between worst case and most likely. So that's what I do, is take those complex things and make them adapt them to what their understanding is and helping them understand how it relates to their goals and objectives.
Thank you, Peter. Absolutely. Is
Uh,
it Golson?
yes, it
Okay,
is.
please share.
So I actually want to build on both what you said, Jen, and
Please.
what Peter just mentioned. Um, and it might have a negative connotation, but that's not my intent here. I have a partner who has been in sales for a long, long time and very successful salesperson. Sales, finance, they don't usually go together. But when I ask him how he sells, he basically says everybody's favorite topic is themselves. And that ego always comes into play. And I think that's part of what you're talking about, Jen, that the math or the money they find intimidating because it can be a bruise to their egos. And going back to what Peter was saying, if you can find a way to speak to their egos as you present these numbers and basically say it's going to make you more successful, look better, and I think that's where you get the buy-in. And it might get old, I have to say, and that's the negative coming in because you can do it so much, and the facts are the facts, the numbers are the numbers, but it at least gets their attention, I think, at the start if you take that approach.
Absolutely. Absolutely. And that's what we're going to really focus on today is how to get it into their language, how to get it into their ego buying into. I got to pay attention to these things and at least start to understand. So thank you for sharing. So I want to start with this financial statement focus. I know as you heard, I have an accounting background. I love I forget if it was Mindy who said that the numbers tell a story. Once I really started to understand that, that's when the financial statements came alive. I passed the CPA exam all four parts the first time, but that didn't mean I understood how or what the cash flow statement was all about, right? I think it took me probably a good 2 years in public accounting to be like, oh, that's what it is. So even when you've done well in school and you pass the CPA exam, I'm throwing myself under the bus, but yeah, sometimes the financial statements still don't make sense. So I think part of it is that we want to bring that story alive and help them understand what story to pay attention to. One of the things that can be a challenge with financial statements is there's just a lot of information, and it's a lot of information that doesn't always translate to the things they look at. How many of you have been with an entrepreneur that figures out their cash by just like pulling up their app to see what's in the bank, right? They certainly aren't like, oh, let me go see what QuickBooks says type of thing. Is it reconciled type of thing? So it's again, it's that looks like math, overwhelming type of experience. And so one of the things that I think is to help them focus. I'm going to share with you, like we'll start with every conversation, a couple of things that I like to point them to and then open it up for you to share as well. So, key areas that I like to help them unlock the story of their business is to be able to look at, of course, cash. And sometimes that's taking it out of the financial statements because it's too far in the past, if you will, for them to understand what they need to know. And so let's take the understanding that they would rather just be able to pull up their app and see what's in the bank and see what can we do to really create something. So I like to have the ability to have my finance teams bring to my executives a daily or at least weekly cash flow projection for like the next 2 weeks or so. So not just looking at cash in the bank or cash on the bank statement because it's too late for them. It's not helpful. So if we can take some of that information and be able to say, here is balance, but don't just look at the bank, right? Because we know that this is payroll is coming. We know we're going to pay these bills, but we also anticipate this cash coming in. We can project that we're going to have a rent payment next week. So helping them actually just very simply, very high level, like all the bills in one, not, like here's the bills that are coming out this week to help them see what's going to come out of that cash account. It's just, to me, I find like a small, simple cash flow projection for the next 2 weeks can actually help them start to appreciate what cash do I really have to play with, because we all know that what's in the bank right now isn't necessarily what's going to be there in maybe even as much as an hour. So we want to give them that information. The next thing that I want to have you consider, and I have had mixed feelings about the Profit First book, if you've heard of that concept or that way of accounting. Some accountants bristle at it. I did it first, but I forget what the author is, but I'll make sure when I send out the slides, I give you some of the book recommendations that help sort of translate to entrepreneurial speaking. But the book Profit First, what I like about that is that it has a cash flow management concepts. And so it sort of speaks to the way the brain of the entrepreneur, or even the executive team should start to think about things, is that not all cash is usable cash. Some of the cash is spoken for in terms of, like you got to pay taxes. Some of the cash is also spoken for in terms of, we know we have these sorts of expenses. So where the problem comes in, and I'm sure I'm not the only one who's seen this, is they will go look and say, oh, look at how much money we have in the bank. It's time to go buy that RV for my family, or go, buy something, some cool new equipment for the company, not realizing that like some of that money is already set aside. So, like I said, I've had mixed feelings about the Profit First, but what I do like about having my executives read that, especially the entrepreneur, is it's like spoken from a non-finance person on how to think of your cash and how to like kind of have buckets or ways to be able to say like you gotta think of your cash having purposes instead of it just all being one lumped amount. So that's something that I think has really helped. I will say though, if they take it to the point where they want that in their QuickBooks and you moving money around, it's kind of a pain in the butt. So I'm not necessarily advocating for that. So go there gently, but at least I find that they understand like I can get profit when the cash is already set aside for these things. It helps them understand finances in a different way. Like, okay, maybe I shouldn't overspend on these things because it's going to hit my profit. Or, oh my gosh, I do have to set aside tax money because I will be having that bill at some point, right? And so just getting that mindset has been really, really helpful for me to have them be smarter about their decisions that they're making, because sometimes it's the emotion that makes the decision, not what really they have to spend. The next concept that I look at within the financial statements is I want to make sure the entrepreneur is paid fair market value. And remember, I work with a lot smaller companies, growing companies, but you can see this in not so much in larger, more established companies, but you will see them not being paid fair market value. And why that is so important is that you want to get them to that point. So if something happens to them, the company can continue. And a lot of times they make the decision of like, just keep reinvesting what I would get paid into the company. And to me, there's a huge risk. Again, I'm thinking from an ops point of view, right? A huge risk. So I'm not just trying to get them paid, I'm trying to get the company to sustain, such that if something happened to them, we could actually hire a new executive, a new CEO, whatever role that owner has. And so that's one of the things that I look at, is that we strategically work towards getting them paid at least fair market value. Now, if they are like for their work, for their salary, right? Separate from distributions of profit, but making sure that the payroll really matches the skill set and the team. And I think having that conversation with them from that risk point of view and being able to be replaced and knowing that that is what is needed is again, what's in it for me, right? Having them understand, I want my baby to survive, I want this company to survive, then I'm not going to argue so much with being paid fair market value, right? So that if I, as the owner was paid to come in as the CEO, I should be paid like that. And if we're not there yet, how can we work towards there? Another piece that I like for them to look at is that if I've had this with owners, that they just, I had one, I'm not going to say his name at all, but he basically compensated himself with credit card debt. And I was like, oh my gosh, you cannot pay yourself this much. So this was the other side, right? Overpaying, being like, oh my gosh, we've got all this revenue, I'm going to just pay myself a percentage, never really looking at all of the other expenses. So having them start to understand, it took me quite a few different spreadsheets, like graphs, all kinds of things to just finally break through, but I wouldn't give up. I guess that's one of my lessons for today. Do not give up. But I was like, okay, what about looking at this? Like, that spreadsheet's too confusing. So then I broke it down very, very simply to be like, this is how much revenue. This is how much goes out. The total amount goes out of revenue. This is what's left. See how they are the same. And if you keep paying yourself this amount, you're going to keep paying yourself with your credit card debt. And he was every month building this debt. So having them understand the source of their debt can also make them understand how they're getting himself. I mean, he was getting his business, and personally, he was getting himself in trouble because his name is, of course, on the credit card. But again, having them kind of start to see if they have debt, how to manage it. Ideally, no one else but him was paying themselves with credit card debt. But if they do have debt, having them have that as part of the plan. I think one of the things that it's hard for them to understand is that they don't see debt on the income statement. A lot of times they don't look at the balance sheet, right? So obviously you could tell I was a past auditor because I'm all talking about the balance sheet, but bringing that to life and have them understand that this needs to be part of what we are planning to pay off. That I like to be very straight with my entrepreneurs, that if you have debt that isn't getting a return, like sometimes debt can be very strategic, but if you had debt, which often happens when you're starting up just to make it through, that was essentially past decisions where you didn't tighten the belt enough and now you have to pay for it, right? You decided, I'm going to overspend and take on debt. So now your future profits have to pay back your mistakes if it was a mistake, right? So it also helps them to be better the next time when they're thinking about debt. If you really get in there and just be straight with them of what was causing these debts. So next pieces I like to look at
Well, Jen,
Oh,
Jen,
yeah, go ahead,
underscoring what you just said
please.
is that they're focusing on the profit and loss statement. They're focusing on net income. They're not looking at the cash flow statement, and they're not looking at a cash flow projection. So, what you're really emphasizing that you have to beat into some entrepreneurs is just because you made money doesn't mean you can spend it. You have to look at, okay, what's going to come here, what's going to happen here, where's your cash going to be, etc.
Yes, absolutely. I see other heads shaking too. Does anyone else want to add to those comments?
Yeah, one of the very first clients I had way back 35 years ago was a medical doctor, and he came to me saying, "Look, my business is growing. I'm doing awesome, but where's my cash?" So I spent some time. I built a model for me, an income statement and balance sheet, but also a cash flow. And where he was able to see visually that his company was growing, but his receivables were not being paid in a timely manner. And the receivables balance kept growing and growing and growing. And he was profitable, but he was very cash poor. So we made some changes, changed his collections schedule, and things got back on track. So cash is king. It's you can't get around that.
Absolutely.
Yeah, what you're emphasizing, Peter, is the fact that just because your company's growing doesn't mean it's generating cash. If your receivables are lagging, you're in trouble.
Exactly. You guys set me up because that was the next thing I was going to say is even sometimes before I start with a client is I want to look at receivables because a lot of so many are not really focused on, again, from an operations point of view, what's my process to collect, what's my policies to collect. So that can start to have them understand that yeah, we don't have cash if we don't have good operations and policies and processes and accountability to those collections teams around receivables. So again, as an operator, I want to make sure that that is one of the things that I look at most is like what can we do to make sure our receivables are being collected timely, dealt with if they're not. The other thing I've seen some things where they're not putting everything on the invoice. So it's even just having these conversations with, I work in services, but also, in production, like, are we capturing all the costs in our invoices? And I've had clients who hadn't, and then was like instant boost to cash and to revenue because we weren't billing for everything. So it's just helping them understand that like we are also, especially if you're talking like to the COO kind. Those are the types of conversations I would want to have with my finance people is like the processes to make sure the money is coming in. The other areas that I look for stories around what's happening in the business, of course, and now I'll finally get to the income statement side, is gross profit and operating profit. Some people look at EBITDA when you talk about operating profit, but I just want to basically have them see those two numbers to know, okay, after our direct costs, like what is our profit? Because one of the things I will say, and this is where I've seen other get in trouble, is they look very much at the top line, how much revenue I have. That's how they define themselves. So what I'm trying to do is steer them to look at gross profit as the top line. I want them to understand like this is more what you have to spend your operation expenses on, not the top line. And the other side of it, which I said is the operating profit. I want to know, are they profitable? I don't look at the bottom line. I look at when we make our money and we spend our money to provide those services, what is causing our profit? I don't want to see anything that is like basically forced profit, if you will. I want them to just know, is what we do profitable? Because if it isn't, I, as an operator, need to work with the other executives and make sure that we can turn that around because that is like a walk towards death if we can't get the operating profit to be viewed all the time and to be managed too. I'm going to pause there. Anything else you guys have on financial statements that you want to share as it relates to getting them to really start to understand the story of their business through the numbers?
I would add a point there
Please.
in agreement with you, Jen, which is that point you were making about operating profit versus gross profit versus net earnings. It's important not just for small entrepreneurs or small companies. Those very same issues are often very important for big public companies who might take pride in the fact that their net earnings are growing. And then they get disturbed when the Wall Street analysts start questioning them about operating profit. And, and they have to understand the difference between decisions that may have happened on the treasury side of the business that affected the bottom line. But the Wall Street guys might be looking at what's happening on your operating profit line and why is it not growing the same as your net earnings are growing? And that was a very real issue. I remember I had, I guess this is going back 25 years ago when I was at Bausch and Lomb, and the bottom line was growing very nicely, but the Wall Street analysts were getting concerned because the operating profit line was not growing in sync with that. And we had to do some explaining to them as to what was going on there. So,
Absolutely. Well, and one of the ways I have them focus on this is weekly metrics that we are looking at in our leadership team meetings or one-on-one meetings that I have with the COO. So some of these numbers that I just went through, I want them to look at. So I would much rather them see where we're at with these numbers as we just look at these few numbers off the financial statements. Or the ones that we're like focusing on. So if receivables is not an issue, maybe we're not looking at that every week, we're looking at it every month. But how I get them to focus is that I just pull out, not the whole financial statements, but pull out the things that I'm kind of teaching them, training them to address. And so that's sort of one of the ways that I get them to focus is like, pull out what the things we're working on. So we could see what you measure moves, right? Is so are we starting to pay off that debt? Are we starting to get those receivable collections to be within our benchmark? Is the salaries lining up with our fair market value target? So whatever you guys are working on, that's how I have them focus it, is pull it into the data that we're looking at, and that way we can have a discussion. Okay, it's moving, it's not moving, in the way we want to do. Let's have a discussion to see, like, is there something more we need to do? Is there a broken process? Is our team not following through with collections? Like, what is happening? So that's sort of how I kind of make those numbers come alive, is that I have them see the responsibility of what those numbers mean as it relates to their operations. So one of the
Jen,
things,
can I,
go ahead.
sorry to
Please,
interrupt.
please. Yeah.
So what you said about the making sure to put on the invoice every service you're providing so that you get paid for it, that actually triggered a learning I had from the current CEO, then COO of Quest Diagnostics, Jim Davis. I was the CFO, regional CFO for Quest's largest region. And as the largest region, we had a routine of monthly meetings by the COO and CEO presenting numbers. And one thing Jim Davis used to say was, make sure you get paid for everything you're performing, especially in healthcare and reimbursement. You have to like chase after it. And his whole point was not only to beat us, but whatever you're bringing in, that top revenue line goes straight to the bottom line, right? Because you have already incurred the costs. You just need to make sure you're getting paid for it, and that's full recovery to your operating profit. And I've used that line in subsequent roles. And you're absolutely right. It clicks immediately with certainly the CEO, but more importantly, the COO. And because they're so cost focused, right? And it shifts their perspective to, okay, I need to make sure my pricing is right, my invoicing is right. So thank you for triggering that memory and learning for me.
Absolutely. Thank you for sharing it. The last thing I wanted to bring up and around this topic of financial statement focus, the other thing that I have to do, and this is from an operational point of view, is that I want to work in collaboration with the finance team to do what I call at least an annual operational expense audit. So to your point, I am expense focused to a way, but I'm looking at it from a risk, right? And also efficiency. Where am I spending the money that I need to? So this is not a financial statement audit, as someone who came from the auditing world. This is really where we want to make sure, are we or are we not investing in the right resources? So I will use the financial statements and get more of the detail, and I will work with sometimes firm administrators. It can be with like office managers, someone in the admin side who's kind of responsible for the operations, overall operations. And I want them to look at the financial statements. A lot of times I think people will do like an expense audit with the finance person, but let's be honest, you have no idea what really the operations are seeing. So some of these things, and marketing as well, like where are we spending money and should we is the question. Because from a finance point of view, you're looking at hey, this is within budget, or it looks similar to last year. So you're not going to know, why are we spending money on that subscription we don't use anymore? Why are we spending this? This is what I found with a client. Why are we spending this much money on marketing? Oh, we're using it to have them create our blogs. $5,000 a month for blogs. This is a small law firm. And then I was like, oh, cool. Let me go see the blogs. Not on the website. So it didn't take long for us to renegotiate that contract, and it didn't take long for me to say, okay, bye-bye, let's fire them. So it's not something that would have been caught on the finance side, and that's part of what is really important, is to have operations people work in tandem with finance people to say, what's behind that number, what's included in the number. So the couple ones that I look at are like my black holes, or areas where we're probably leaking funds. Marketing, is there a return on it? So you can help figure out, like, okay, this is what's supposed to be happening. Is it happening? Like I said, is there blogs? But also just like a lot of times revisiting the contract they have with outside marketers, and just understanding, you expected us to get this return. Are we, helping them see, is there a return on these investments, is really an opportunity for improvement, again, with the marketing team to be better at making sure they hold anyone outside or inside accountable for these things. Another place where I see problems is subscriptions. That's the same with personal, right? I didn't know I'm still subscribed to that. We're not using it. Software, maybe you ask them, okay, well, these are all the software costs. Are you using them all? Can any of them, especially with the COO too in the room, is like, can any of them like cancel each other out? Do you need both of these types of things? And insurance. A lot of times we may not have insurance being a part of like what's really happening now. So you might be able to get cuts in insurance. You may actually be at risk too if you don't have your insurance be right. So this may not always be how to lower the expenses audit, but making sure that the expenses match the operations. So with that, I want to turn it back to you guys. Anything else you've seen around just kind of taking the operational view of what's truly happening in the company and tie it to what are the transactions? Has anyone else done some kind of audits or making those two people talk?
I have, Jen, as a matter of fact, with a nonprofit. You look at what's the goals of the organization and what are the results. And sometimes you look at different lines of business or different markets. Sometimes you bring all this effort into something, you're not getting that return on your investment, or the opportunities may lie in a different area.
I love that. Yeah. And that's why I said, are we investing in the right resources or not? Human resources as well as other resources. And that's a different way to say it than, an expense audit per se, but they want to have the investment and see if there's a return. And are we putting our money where we need it? All right, I want to move to the next topic. Oh, go ahead, Ruben.
Marvin brought up nonprofits. One of the things I see about nonprofits is, they're a bunch of do-gooders and they like to do all kinds of things and that have good purposes. And one of the things when I've been on a board of a nonprofit, I always have to bring up is, does that support our nonprofit purpose? Does that support our mission? And applying that to for-profit companies, a lot of times you go off on tangents. You're not focusing on what you do best because you think it's going to be good, or you got too many balls in the air. And you have to be careful and focus. And again, going back to cash flow, do we have enough cash flow to go off on this tangent? Is this an appropriate use of money?
Absolutely. I do think I'm glad you brought that up because I do bring some of I've been in the nonprofit space basically since I was a teenager. Those were the clients that I worked with when I was an auditor. And one of the things that I do think that they may not always do it well, but they at least try to do it well, is have that eligibility filter where they look at, does this align with our mission and our vision? Ideally, they ask, does it align with our values? And where I work with my clients is that I really help them to look at the same thing. Just because we're a for-profit doesn't mean we don't have a focus. So I appreciate you bringing it up because there's an impact we're looking to make besides profit. What is it that we are looking to provide to our clients or our customers? We need to make sure, like, if we're, what are we doing now, or what we might want to do to be able to see, is this aligned with what we should be doing? Because I do believe finance should be a part of it. And I do believe it also is aligned with, like, is this who we are? Is this what we should be doing, type of thing? I think it's both parts of those, finance and is this what we should be doing? Is this how we work? Should be part of that eligibility to decide, is this something we move forward with or not? I do see a question about, do I take them through 13 weeks of cash flow? In terms of projections, you can go as far out as you can. I do think it's helpful to see a quarter and do some projections, but at least I recommend at least the next 2 weeks. Sometimes I think it's too far out to really project well, but if you are making bigger decisions, and we'll talk about it in a little bit around making decisions, it is helpful to have some projections and models. But I think at least on like just a week to week looking at what is our cash, I'd rather have just like a 2 week mini forecast, because I think you can go out that far with pretty good accuracy. But what do you guys think? What have you guys done? How far out do you go with your cash flows?
Really
Dan, I
depends
see
on the
you shaking your
company.
head.
I think it really depends on the company, the industry, what stage of their growth they're at. For early stage companies, you very definitely typically do need to be looking at 2 week out, 3, 4, 5, 6 week projections. But in other companies, that may just not be relevant, and you may want to be looking at 2, 4, 6, 8 months out.
Absolutely.
It really depends, I guess, is what I'm saying.
Yeah. Yep. Exactly. Anyone else? Right. Well, somewhat related. Now let's get into the metrics and the analysis. So this is also, we were talking about financial statements first, but now let's take some of those numbers and turn them into more, I would say, helpful. I think the metrics can be a little bit more of telling the story. It's like bringing the relationship and the expectations alive of the financial statements through the metrics and its related analysis. One of my favorite books, and I've read it many times, he has like a whole series, is Greg Crabtree. Again, I'll send you guys more of this information. Simple Numbers, Straight Talk, Big Profits is the first book. He has a second book as well. What I love about that book is he is a CPA, he is a financial person, and he has found a way to really communicate, and that's what this whole book is how to communicate to that entrepreneur, to that founder, and the other executives, to really help them understand what's important about their financials and kind of pick the metrics that help them make decisions, and just sort of breaks it down into simple language using simple numbers and straight talk. I mean, so I recommend, it was really eye-opening for me as someone with a finance background, to help kind of do that bridge of financial speak into entrepreneurial speak. But one of my favorite and his favorite metrics that comes out of this is labor efficiency ratio. So you're looking at what is the direct cost of labor, or the cost of labor related to that gross profit. And one of the things that I find, especially as a COO, is going back to efficiencies and having the right people in the right seat. So much of my time is focused on the people and the process. And this is like one number they can help me see, especially as compared to the industries, but to see is like the effort that we as a company are investing in our people, our processes, and what they're doing. How is that getting a return as it relates to gross profit? And it's very eye-opening, especially if you look at it over time and look at the trends to be able to see. But it's a very good clue to me to see, oh my gosh, compared to our competitors or in our industry, we are way high. We must have some leaks. We must have some inefficiencies. Maybe I have wrong people in the wrong seats. So it's like taking our financial numbers and putting them into something where, oh my gosh, I have inefficient labor. I need to do something about it. I need to work with my team to be able to see where are we not working at our most productive. So that's one of my favorites because it really directly relates to my responsibilities. Another one I love is quick ratio. Once they understand it, it helps very, very quickly, like, okay, do I have cash to pay for my upcoming bills? Do we have that money to make it happen? Another metric I had already mentioned was the operating profit and the related profit margin is just really having that clarity, but having that profit margin as well. It helps them to be able to understand true profitability, like we've already talked about. But one of the things that I find sometimes is I get resistance, especially from these more new to business entrepreneurs, in sharing their numbers, even though I want them to share it with their team so they can be responsible. But when you start to maybe put some of these things in percentages, that can make them more comfortable and have so that's why it's nice when we can move it into a metric versus like I've had this many times. I don't want them to see how much money I'm making. They're going to ask for a raise. Well, I can't have them be responsible for profitability if we're not sharing it. So sometimes just turning it into the margins or the percentages and the metrics can help speak to that. And then the other thing that I like is to really understand profitability by product or service line. I want to understand how each piece is doing. So again, where I'm responsible is to make sure all of what we're doing is causing a profit. And it's very hard for me to see if it's all collapsed together. So I like to work with the finance team to be able to see what is the profit by product, if you do product, or by service line. So I can understand where do we want to spend more of our efforts into growing this service line or product line. Where are we thinking this is profitable and it's not? It just gives me way more information to be able to make decisions on what do we lean into or what do we lean away from. And then I'm also very curious, and I want to understand from the finance team, how are we allocating overhead? Like, what is the process? And understanding that so that you can work with the operations to make sure, does that make sense? Because that can really mess up the profitability, right? It's just to understand, okay, how are we sharing the shared costs amongst the different product lines and service lines? So I'm going to turn it over to you. What are some of the metrics in the analysis that you like to bring forward that you've found opens up these conversations for the executives to be able to be like, oh yeah, I got to look at this and understand this?
Well, Jen, one thing I'm also a computer programmer and I've set up hundreds of companies. And one of the things you always get asked is, what's the right chart of accounts? And my answer beats the hell out of me. What information do you need to run your business? So what you're highlighting is you have to accumulate information in the right buckets. You have to set up the chart. You can't force your good ideas down the throat of the owners. You have to find out and understand from them, what do they need? Where is the information coming? And then once you do that, you then go into, how to present it. And, I taught a managerial accounting course last year. And it was interesting because, it looks at really, garbage in, garbage out. And one of the things you can do is go to the managers, but also go to the workers who get paid bonuses or get paid based on production or certain metrics, and find out, okay, do you think the metrics are fair? And what do you think is wrong? And what would you do differently? And, it's interesting getting that perspective, that you can see where there may be holes in how you're accumulating data and rating them.
Absolutely. One of the comments in there is about, do we do anything around AI? And so one of the things I like to do, Ravain, kind of to your point, is I like to work with the folks that are responsible, whether it's like at an individual level, a management level, director, executive level, and help them co-create the metrics with me. But again, now I'm looking at someone afraid of math often. So then we look at, okay, how can we take your responsibility? So I have them list, whether it's out of the job description or just something that they're being held accountable to, and let's put it into AI and say, what kind of metrics can I be tracking to be able to figure out, hey, am I doing the right act? I ask it two questions. Am I doing the right activity? And what metrics do I need to look at to see that my activity is causing the results? And then what are benchmarks? And then I always love to show this to others who are responsible for metrics and again, afraid of numbers, is then I say, okay, now show me how to do that calculation and give me an example so that they don't feel like they have to know it. They're, like you're saying, Ruben, co-creating it, but they're also seeing like, oh, I tell them all the time, like, look, I don't always remember how to do these metric calculations, so I have AI help me. And then they're like, oh, good. So I have a tool, I have a friend, if you will, that can make me look smart. Other questions or comments around what metrics or things that you do to help them use, again, taking from the financial statements and starting to break it down into a little bit more easy to analyze and make decisions from?
I feel like I'm talking too much, but I don't imagine this one. Sorry. So you talked about labor efficiency metrics. I think it was mostly on the operational side. What I've seen work is also for sales and marketing teams. I think the term used, or I heard, is productivity, but essentially revenue generation per person. And you can, in the case of sales teams, you can look at their territory specifically, so it makes it easier. And being the difficult finance person I always took it to the next level, and I tried to get to profitability per salesperson, because sometimes, let's face it, sales, I'm picking on salespeople a lot, sorry, but they reduce prices so much or promise so much in terms of service levels that it becomes non-profitable, and just focusing on the top line doesn't give you the true metric for productivity. And then you can apply the same to marketing, which is a little bit harder because they're just broader in terms of their scope of marketing efforts.
I love that because it helps with accountability, right? And where we were talking about before is that they look at the top line, but I would rather they be held accountable to the profitability because they're causing that profitability. And I think you're absolutely right. You'll start to see if their profitability is off. And I have a client where it's the production team that is like, by the way they are working, they're causing things to not, like they're not reporting certain things, that they're quoting different essentially hours, which then is what converts into revenue. So it's not the sales team, it's production. But when we start to look at profitability by, like you say, the causer of the profitability in some way, shape, or form, the accountability allows for us to have a better conversation. And by accountability, I I'm not a accountability as a punishment, I'm a accountability as feedback. And so I love what you're saying is that this helps us to see is what we're doing by our actions, giving pricing discounts, adding little bonuses, or like we said in production, like the things that you are doing is causing us to lose money. We have now given this service away. And unfortunately, that's what we were finding on this client. And so we've been really narrowing down how to hold them accountable to these profitability numbers, but also the process. We were seeing where they were missing in the process that was causing us to lose money. And that's obviously, like, I love to dig into the metrics that help us know where to dig into the way we work. That's where I love to live. Okay, I see we're heading towards the end of our time, so I want to make sure that I get to this last topic, which is the other thing that this is my favorite thing to partner with finance on, because I don't want to do it. Please don't make me. I want to come to you all to do this. So helping with forecasting, modeling, we were talking about cash flows and bringing it out. But one of the things that I really get a lot of questions from my clients on is, can I hire this person? Can I invest in bringing on this new marketing thing? Can I do this new venture? Like if we do this, what will happen type of thing. And I love that I can have my finance team help make the impact of those ideas and those decisions be clear from a finance point of view, because so many times people make decisions and only find out on the back end, uh-oh, that's a bad idea. So to model things out, to forecast, to really sort of budget by month, anything that helps us make better decisions in the moment is like such a gift to me. I thank you, thank you, thank you. I love you. I praise you when you help me show them that this is a stupid idea, or like this is brilliant, kind of thing. And so the partnership of not just me being able to kind of lay out what would the process, what would be the steps to achieve this new idea, or what would be some of the risks, I need to know the financial pieces. So for me, I love those projections on the cash and the profitability around a certain decision. I also love your help in getting us to understand the ROI. What's the return on investment and how soon will I get it? So, I'm not expecting it next month, but I want to know, like, if we're going to invest in this new service line or this new product or this new initiative, how quickly will I get that money back? If it's 5 years down the line, maybe not so interested. If in 5 months, I might be willing to make that decision. So like I said, I also it helps a lot with, can I hire this person? Being able to model out what that looks like and what return they would give. What I always have the conversation, but to have like financial models with it really helps make the decision much more real for us, especially when we come and have different lines of or functions of the business say, oh, I just need to hire this person, we're too busy. I want to partner with finance to say, well, let's see, can we afford that? What are you going to do to make sure we get a return on that? Because we go back to that labor efficiency ratio, every hire should be causing our profitability. So if there isn't that connection, it makes my other leaders be much more accountable to their hiring decisions, and causing us to say, you know what, like you already are under capacity. How can we be more efficient and with the team that you have? Like I'd rather be able to have those conversations looking at it from a financial point of view, not just operating. And then of course at the times, and this is probably happening a lot more right now, when we have to make cuts, working in partnership and to understand, like, if we do certain cuts of people, of other expenses, what does the modeling look like? How does that impact our profitability? Because, we're going to take away from some of their productivity. So what does that look like? And so being in partnership when we're making those cuts. And then the other thing I love to work with my finance teams with is salary caps. This is a concept, gosh, I think it came out of Profit First. I can't remember which book it came out of, but maybe it was Simple Numbers. But anyways, it was this concept that we hear in sports, in professional sports, like in the NFL, right? This is our salary cap. we have to spend and get all of our players within the salary cap. I think more businesses can take on that understanding is like, if this is the profitability we want, these are our other expenses. That just means this is all we can spend on salary to get the profitability. So having you help me model that as an operator really helps us keep our salary in control, because oftentimes, especially for me working in the professional service space, our biggest expenses are employees. So having that help with the salary caps is so grateful, because it's really hard when we want to hire or give raises or whatever. We can have a much better decision around, okay, if we do that, what other expenses are we going to cut? Like, it's only coming from somewhere, because we want to keep a profitability at a certain line. So I love that concept of salary caps. Now I'm opening it to you. What are some of the things you like to use as tools to help with teams to make those decisions?
Well, Jen, one thing, you keep talking about profitability. And, I always look at cash as king. And one of the biggest things that people run into in setting compensation is not realizing cash is king. So, for example, they will compensate commissions based on gross. Well, if you do it based on gross, then there's an incentive to cut the price to get the sale, and therefore you're shooting yourself in the foot. And then you also, a lot of times, they'll pay the commissions on the sale rather than when the collection comes in. And then what do you do about returns? So there has to be a cash flow and really looking at cash when you're making compensation. That's the whole idea of forecasting.
Yeah, I appreciate that so much. And I think too, like, I'll hear referral programs. Oh, I want to give out and it's like, well, you don't have to pay it until you get the cash and you're past the return period. I think that's excellent. The other thing too, I think is really important. I love bringing back that idea of like the operating profit and that cash. One of the things that I see a lot of mistakes is that they will make decisions to invest based on projected profitability, revenue, and so then the expenses are being made, let's say in February, when we don't expect to really make up for that revenue until November, let's say. And so they're like putting some of the expenses before the revenue. And so we have to decide, can we afford that? To your point, do we have the cash to make it until we can, forecast and see when the return is? So just even understanding when the cash is coming in and going out, or if we're making the decision to increase salaries now, when are we going to be able to pay for it? So sometimes when we look at budgets at the end of the year, it looks like we have the money. But when you start to break it down, like, when does that money come in? It makes a whole different discussion of when do we feel comfortable making that expense, because we're going to have to float that if we can't make up for it in the current time. We may not be able to make that decision. So thank you for sharing that. Anyone else? Other modeling and forecasting? Mindy, please.
Hi, Jen. First of all, this conversation is outstanding. I'm loving every minute of it. And the clients that I typically work with are very small solopreneur operations. And the struggle I see the most often is at the startup phase, when we don't have true data, we don't have true patterns to base our forecasts on. And you mentioned at the beginning the business owner who was paying himself through credit card debt. I understand the dangers and the risks and the expense of that. But what I'm wondering is, how do we talk about leverage with a new business, leveraging, our assets and our debt when we don't necessarily know what their income is?
It's a great question, and I think that's part of why I'm so grateful I'll share mine, but I'm so grateful that to partner with finance people, and I'm very excited that they already have you in their camp because that's going to start them off on the right way. One of the things that I get really straight with my entrepreneurs is that the answer isn't always going and finding the cash. The answer is potentially in how we're working, or and what I'm really looking for is what are you going to do to cause the revenue to pay it back, right? It's the conversation around that. So, for example, it's very easy when you're starting out to want to throw. I know I get there myself, and I've gotten in trouble. The first go at starting my own business, and part of why I know all these things is from like scraping my nose very hard on the asphalt and making some bad mistakes. And I'm sure I'm not alone in that with other entrepreneurs. But one of the things that I have learned this time is to suck it up, buttercup, right? Like I can't pay for that marketing thing I want right now. I've got to get another client. So what is the activity I'm doing to go get that client? So it may not be that you can fully forecast, but you can have a conversation of you cannot afford that. So how are you going to pay for it? It's either going to come from debt that you then have to pay for with future profits, like we were talking about before. Bad decisions now you're going to pay for later, or personally pay for if this doesn't take off, or get your butt out there and sell. I mean, I wish someone would have told me that. Like, you have to basically sell your way into investing. I hope that helps, but I'd love to hear from others what you do when they're just starting out and don't necessarily. The other thing I will say about metrics is even if they don't have, I want them to start tracking them, because even if they're not the best metrics, we will get better over time. Oh, I don't know what my benchmark is. I don't care. Let's just pick something. Not worry about if we hit it or not, but I want to start capturing the trends so we can make better decisions. So I think that's the other thing, is that yes, you don't know right away, but just start collecting them so you'll have a better idea even maybe in the next 6 months.
Yeah, if I could again chime in.
Thanks, Peter.
I mentioned this earlier that, well, one of the key principles I repeat with my customers, depending on the situation, is you can't manage what you can't measure. You've got to have key metrics that are critical to your business at the stage of growth that you're at this point in time, looking forward to other stages of growth. And I put together, forecasts, simulation models with financial statements, balance sheet, and a cash flow, which I prefer more than anything else. Even going so far as creating what I call a free cash flow to the equity and to the owners, et cetera, et cetera. But incorporating in that the ability to show, okay, what's your most optimistic outlook? Okay, fine. All right, what's most likely? All right, what's worst case? And having them see these boundaries of where they can work. And I always guide them to the fact that, as I mentioned earlier, it typically ends up somewhere between worst case and most likely, but leaning towards most, on the conservative side. That gives them a reality to work with. You kind of, what you're doing is building a framework for which to, reference, and more importantly, to set their expectations in a way that makes sense. I can't tell you how many times I work with businesses where they come in and they've got all these grandiose plans and growth and sales and so on and so forth. And then when we build these models and enter the costs and the timelines, they get a new sense of reality and reflection. And that's good, because you always want to deal with what is. And so that helps them reevaluate and modify their expectations and their growth and their vision for their business.
I love having those three different options, Peter, because I will say that the way that entrepreneurs often are making the decision is in the best case scenario only. And that's what gets them in trouble. I have to constantly remind myself when I was first beginning that hope is not a strategy. And oftentimes that's where they're making their decisions from. Like, well, I hope I'm going to make this much revenue, so why don't we spend like we do?
Okay, Jen, anything else anyone needs to say? Jen, you want to wrap it up?
Yeah, we're already at time. This has been so great. Thank you so much. If you have questions for me and you want to send it to me, I'll definitely be sharing my information with the slides and all of that kind of things. The only other things I would say is please take some action from this. I always love to leave when I'm sharing with folks, like, what's one thing you heard today? It doesn't have to be from me, it could have been from someone else, or just like it reminded you of something that you can take action on, because it's really a commitment to you to take that action. And then I do have free resources. This will be shared as well, for you or for other entrepreneurs if you want, or other operators that you are working with. I do weekly little operational focus mini trainings, or little vlogs, basically little videos, are about 5 minutes. I also host roundtables. So if you know fractional COOs, or just either, again, mostly small businesses, CEOs and COOs, we have free roundtables to just discuss some of these operational things. And then I'm always open to doing educational calls. So these are not sales calls. You can find them on my website, but they're like, I like to be the Wikipedia for COO type questions. A lot of times people don't understand the operation side and how to run the business. And so it's a great way for folks to come in. But I also just thank you for having me today.